Hi guys, so in this video I am going to show you all how to use the FXCM platform to actually take trades when you receive trade alerts from me. So here's an example of an alert I sent earlier. This is long Euro USD, buy at 1.3605, stop at 1.3570, risk 35 pips, and target 1.3640. So for someone who's new to Forex trading, this might just sound really foreign to you, and I don't blame you guys. I was like that too at one point. So how do you go about it? Well, right now we're looking at the online platform for FXCM Trading Station, and the link for that is that. Once you log into it through your password and username, you come across a screen like this. I kind of have my layout a little more customized, and you can customize your layout by going to view and adding or removing certain things. For instance, I added a message board here. So you can always move it around on this side, or you can move it down. You just have to tweak it a little just to make the appearance more user-friendly for yourself, pretty much. So here we are. This was what we were looking at. So okay, how are we going to take this trade? There's multiple ways to actually take a trade on the trading station. One is you can go on the advanced dealing rates. So when you click on this, they show you different currency pairs and their current rates. As you can see, the Euro USD is the very first one. You can see the sell price is at 1.36038 and the buy price is at 36062. So the difference between that, the 3.8 and 6.2 is 2.4 pips. The 2.4 pips is the commission that the brokers make on this trade. That's how it works. You also see that there's a rollover number. This shows that if you sell, for instance, you will make 3 cents of interest on your trade if you are in this position for 24 hours or more, and if you buy it, it's negative 8 cents. These things could be a little more technical, but it's a very small interest that is either gained or lost on your end, or sort of a fee that you have to pay for clearinghouse brokerage. So okay, how can we do it through this? We are deciding on either doing buy or sell. So let's just say we decide to do buy. We click here, we get the account number, we get the symbol, it says buy or sell, you put in the amount, K. Now amount is not how much money it's going to cost you, it's just how much of a certain currency pair you're going to buy. So to buy 1,000 euros, you need to have at least $32 in your account. That's what the margin is telling you. And that also tells you that if the trade moves in any direction, in your direction or against you, it's going to cost you 10 cents, or you're going to make 10 cents per pip as it moves. And the rate is actually the current market price at which you're going to buy. And as you can see, this is a market order. Market orders really mean that as soon as you enter the trade, all the information, you're going to be entered into the trade right away. So this is how it goes. You buy at the current price 1.3606, and our goal was to buy it at 1.3605. And the stop, this is the most important aspect of trading, is the stop, because it tells you how much you're risking per trade. And we decided that our stop was going to be 3570, or in this case you can see over here it says negative 33.7. That means you're risking about 33.7 pips on this trade if you take the trade right now. And our limit is 3.640, which is the target. So about 33.9. So we are risking 33.8 pips or 33.7 pips, and our goal is to make 33.9 pips in profit. So if we just take 1K or 1,000 of the euros versus the dollar, we need to have at least $32 in our account for margin purposes, and we will be making 10 cents or losing 10 cents per pip. That means if this trade goes against us, we are going to lose about $3.37. But if it goes in our favor, we will make about $3.39. So this is one way of actually taking the trade. You go on the advanced dealing rates, you click on buy or sell, and then it opens up this box for create market order. Now, you can also click here, and this is kind of a really neat tool. This shows you right away what's happening with the trade at the current moment. So where it is. So if we want, we can actually just take this trade right now to get an idea of what's going to happen. And here we go. We'll just click buy. And we go back to Euro USD. I already had an earlier position, but we just joined in, and this is the most recent position we took. And as you can see, you're already down by -2 pips, -2.7 pips. So what that means is that that is actually the commission that the brokerage has taken on that. So first of all, the trade will have to move in a positive direction by 2 pips before you even start making money. Until then, the brokerage is making money based on their spread. Now, the other way that you can do this is you can go on the simple dealing rate. Same thing, buy or sell. I like this a lot better than the advanced dealing rate because it's much more clean. It tells you the spread or commission is 2.5. The highest this trade has gone is at 3.611. Lowest is 602. These are the rollovers. Pip cost is 10 cents. So this pip cost is based on a micro lot or just 1K. Again, you just click on buy or sell. You can buy it, put in the same information, and you'll have a market order. That means you will be in the trade right away. Now, a lot of times I send you guys trades which are not necessarily ready. Let's just say if I sent you a trade which said that the buy rate should be at 1.3620. So let's just actually do that. Let's just make this, let's just say I sent you a trade and I'm saying that buy at 3.620. Okay, that's the buy rate. So obviously the price is currently at 3.3603. It hasn't hit that level yet. So what do? You can either go on the advanced dealing rate or simple dealing rate, or if you're on the chart for Euro USD, you just do the right click on your mouse and go to create entry order. This is important, entry order. So what that does is it asks you, do you want to buy or sell? So we're going to buy. We're going to buy 1K, and we're going to buy at a certain rate. And the rate that we're looking at is 1.3620. Our stop is still going to be 3.570, which is about 47.6 pips. It should be about 50 pips, but you have to put in the spread that's being taken by the brokerage. And our limit is still going to be, let's just say, 40. And this is an entry order. That means it will not trigger right away like a market order does. So we'll go ahead and press OK. And as you can see, here it is. The entry fee will be at 3.620. So if the price hits 3.620, we will enter the trade. Our limit is 20 pips, and our stop is right down here at about 50 pips. That's the trade that we will take. And if you need to cancel this trade, no problem. You can just right click on this and remove entry order. Boom. So when I send you trades, and let's just say I sent you at 3.600 and the price is at 3.6035, you can just go on this, create market order, and you can get in the trade right away. Buy or sell. You put the stop, limit. The most important thing that you need to keep in mind is how much are you risking. So let's just say you have a $1,000 account. Your goal is not to risk more than 1% per trade. So that means I expect you to only risk $10 on this trade. So if you have a $1,000 account, we are risking about 35 pips on this trade, and I don't want you to risk more than $10 in total. So that means you're probably going to take a trade with about 30 cents per pip in risk. Because if you think about it, that's almost $10 of risk on this trade, and it's 3,000 or 3 mini micro lots that you'll be taking, and your goal would be to hit 3.640. That might sound confusing, what I just said, so I'll just repeat myself. Again, let's just say you have a $1,000 account. So your goal is to not risk more than $10 a trade. How do you calculate that risk? You calculate it based on what your entry point is on the trade and what your stop loss is. So that gives you how many pips you're going to be risking. Now once you know that, you then look at the price per pip and you multiply that with the risk amount, or with the pips that you're risking, and that should equal to 1% of your entire equity. So if you have a $1,000 account, 34.4 pips times 0.3 should be about $11, which is 1.1%, 1.2% of your equity, which should be fine. And that's all you want to be risking on this trade, and you press OK to get into the position. I hope this video makes sense to you. If you have any questions, please feel free to contact me, and I will try to clarify more things for you. But remember that it's really important for you guys to keep your risk in mind. Your margin is really important, and don't try to overtrade. And when I'm sending you orders, most of them are pending orders, so you have plenty of time to get into those. You don't have to take a market order. Just make sure it's not a market order based on the pricing of that trade, and put in an entry order more than likely. And that should be it. If you guys have any other questions for me, do let me know. Once again, this is Azim, and I hope you guys have a great day. Happy trading. Goodbye.